What is happening, crypto fam? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The market is moving at warp speed, and if you're not plugged in, you're missing out. We've got a packed show today with some truly mind-blowing moves and critical insights that you absolutely need to know. Get ready, because we're diving headfirst into the stories that are shaping the future of finance, right now. First up, we're tracking a massive whale that's making waves by shifting significant assets. Is this a sign of things to come, or just a strategic play? We've got the inside scoop on this multi-billion-dollar maneuver that has everyone talking. Then, we're shifting gears to analyze the latest price action for Bitcoin. Are we on the verge of a major correction, or is this just a temporary dip? We're breaking down the charts and expert analysis to give you the clarity you need to navigate these choppy waters. But that's not all. We're also exploring the long-term vision for Ethereum and what it might take for it to truly challenge Bitcoin's dominance. Plus, we're dissecting the potential risks as we head into a historically volatile month. This is information you cannot afford to miss. Stick around because Bitcoin Bulletin is just getting started. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Massive shift detected. Bitcoin whale trades billions for Ethereum. In a dramatic display of market maneuvering, a significant Bitcoin whale has executed a colossal trade, offloading a substantial portion of its Bitcoin holdings to acquire a massive amount of Ethereum. This move, involving approximately 4,000 BTC valued at around $435 million, and a corresponding purchase of 96,859 ETH worth roughly $433 million, signals a significant rotation of capital within the cryptocurrency ecosystem. On-chain data analytics firm LookChain first flagged the activity, revealing that this particular whale, previously associated with dormant wallets holding an estimated $11 billion in Bitcoin for 7 years, has been steadily converting its BTC to ETH since reactivating its holdings. This latest transaction further solidifies a trend of strategic asset allocation, moving substantial wealth from the premier cryptocurrency to its closest competitor. The timing of this massive pivot coincides with a period of heightened market volatility. Bitcoin experienced a notable downturn, dipping below $107,700 before a slight recovery above $108,000, positioning it for a potential 5% loss in August. However, Ethereum has shown resilience, outperforming Bitcoin over the same monthly period. As of the latest reports, Ether was trading near $4,424, marking an impressive nearly 24% increase over the past 30 days. This divergence in performance adds another layer of intrigue to the whale's decision. Adding to the narrative of significant Ethereum accumulation, LookChain also highlighted the activity of another prominent whale, Longling Capital, known for its strategic approach to buying low and selling high. This entity reportedly resumed its Ethereum accumulation on Saturday, acquiring an additional 7,000 ETH for approximately $30.6 million. The actions of these major players, engaging in such large-scale asset rebalancing, provide critical insights into the sentiment and strategic thinking of significant market participants, potentially influencing broader market trends and investor behavior. The scale of these transactions, particularly the multi-billion-dollar shift from Bitcoin to Ethereum, is a clear indicator of evolving investment strategies and a potential reevaluation of asset dominance within the crypto space. The market is watching closely to see if this trend continues and what implications it holds for the future of both Bitcoin and Ethereum. But what does this mean for the price action of Bitcoin itself? Hold on, because the charts are telling a story. And that story leads us directly into our next critical update. Bitcoin price warning: is a major sell-off coming next? The cryptocurrency market is on edge as Bitcoin's price action displays increasingly bearish signals, trading below the crucial $112,000 mark. Analysts are closely watching for signs of a potential major sell-off, with the possibility of a decline below the $108,000 support zone looming. Following a recent attempt at recovery from a low of $107,352, Bitcoin managed to push above the $108,000 and $108,500 resistance levels. It even cleared the 23.6% Fibonacci retracement level from its swing high of $113,457 down to the aforementioned low. However, the bulls failed to maintain momentum, with bears stepping in aggressively near the $109,500 mark, preventing further gains. Consequently, the price has started to slide back down, trading below $109,000. A critical bearish development observed on the hourly chart for the BTC-USD pair is the break below a bullish trend line that had support at $108,450. Bitcoin is now positioned below both the $109,000 level and its 100-hour simple moving average, indicating weakening upward pressure. Immediate resistance is identified at the $109,400 level, followed by a more significant hurdle at $110,000. Further resistance could emerge around $110,500, which also coincides with the 50% Fibonacci retracement level of the recent significant drop. A sustained break and close above the $110,500 resistance zone would be necessary to reignite bullish momentum, potentially targeting the $112,000 and $112,500 levels, with a primary objective at $113,500. Conversely, failure to overcome the $110,500 resistance could trigger a fresh downturn. Immediate support is situated around the $108,000 level, with a more substantial support zone identified at $107,400. If this level fails, the next significant support could be found near the $106,500 zone. A break below this could see Bitcoin testing the $105,500 support in the short term, with a major support level at $103,500, below which a sharp decline could be initiated. Technical indicators further support this cautious outlook. The hourly MACD is currently gaining momentum in the bearish territory, and the hourly RSI for BTC-USD has fallen below the 50 level, both suggesting a bearish bias. Key support levels to watch are $107,400 and $106,500, while major resistance levels stand at $109,500 and $110,500. These technical indicators paint a concerning picture for Bitcoin's immediate future, but is the long-term outlook for crypto's original king still intact? That question leads us into a discussion about Ethereum's ambitious goals. Ethereum's path to surpassing Bitcoin, institutional adoption, and network evolution. The ongoing narrative in the cryptocurrency space frequently circles back to the question of whether Ethereum can eventually eclipse Bitcoin in market capitalization and influence. While Bitcoin remains the undisputed king of digital assets, Ethereum's continuous network evolution and its increasing appeal to institutional investors present a compelling case for its long-term growth potential. The Ethereum network has been undergoing significant upgrades, most notably the transition to a proof-of-stake (PoS) consensus mechanism, often referred to as the merge. This fundamental shift has not only made the network more energy efficient, but has also unlocked new avenues for yield generation through staking, attracting considerable interest from traditional financial institutions looking for yield-generating digital assets. Furthermore, the development of Layer 2 scaling solutions, such as Optimism, Arbitrum, and Polygon, is actively addressing Ethereum's historical scalability challenges. These solutions significantly increase transaction throughput and reduce gas fees, making the network more practical for everyday use and a wider range of applications, from decentralized finance, DeFi, to non-fungible tokens, NFTs. The growing ecosystem of decentralized applications, dApps, built on Ethereum continues to expand, fostering innovation and utility that Bitcoin, with its more limited smart contract capabilities, struggles to match. Major financial institutions are increasingly exploring and investing in Ethereum-based products and services, including futures, ETFs, and staking services. This institutional embrace is a critical factor, providing legitimacy and driving demand. As more capital flows into the Ethereum ecosystem, it not only bolsters its market position, but also fuels further development and innovation. The programmability of Ethereum, allowing for the creation of complex smart contracts, has made it the foundational layer for a vast array of financial and technological advancements within the Web3 space. While Bitcoin's role as a store of value and a digital gold standard is well established, Ethereum's utility as a platform for decentralized applications and innovation positions it as a strong contender for future market leadership. The ongoing development, coupled with increasing institutional adoption and a vibrant developer community, suggests that Ethereum's trajectory is one of significant potential, aiming to capture a larger share of the digital asset market and perhaps, one day, challenge Bitcoin's supremacy. So, while Ethereum charts its ambitious course, the path forward for Bitcoin is not without its own set of critical challenges. And those challenges are particularly pronounced as we head into a historically sensitive month. Bitcoin's Red September risk, whale sell-offs, and market vulnerability. As the cryptocurrency market navigates its current landscape, a looming concern for Bitcoin investors is the potential for a significant downturn, particularly as the month of September, historically known as Red September due to its tendency for price declines, approaches. Adding to this apprehension are the recent activities of large-scale holders, often referred to as whales, and broader market vulnerabilities that could exacerbate price volatility. The recent large-scale asset rotation, where a significant Bitcoin whale offloaded 4,000 BTC to acquire Ethereum, serves as a stark reminder of the potential impact large holders can have on market sentiment and price action. Such significant movements can trigger sell-offs or create uncertainty, especially when combined with other bearish indicators. Analysts are closely monitoring Bitcoin's price action, noting its struggle to maintain key resistance levels above $110,000. The break below a critical bullish trend line and trading below the 100-hour simple moving average suggest underlying weakness. The technical indicators, including a bearish MACD and an RSI below 50, further reinforce the possibility of a downward trend. The market is currently facing a confluence of factors that could amplify the risks associated with Red September. Global economic uncertainties, regulatory developments, and shifts in institutional investor sentiment can all play a role in Bitcoin's performance during this traditionally challenging period. The potential for cascading liquidations if Bitcoin breaks below key support levels, such as $107,400 or $106,500, could lead to a sharper, more accelerated sell-off. Investors are advised to exercise caution and be prepared for potential price swings. While the long-term outlook for Bitcoin remains a subject of ongoing debate, the immediate technical setup and the behavior of major market players indicate a heightened risk of a price correction in the near term. The market's ability to absorb selling pressure and maintain crucial support levels will be key determinants of whether Bitcoin can defy its historical Red September trend or succumb to renewed bearish pressure. These are critical insights for anyone invested in the crypto market. But what's the takeaway from all this rapid-fire news? Let's do a quick recap before we sign off. And that's a wrap on today's explosive Bitcoin bulletin. We saw a massive whale pivot from Bitcoin to Ethereum, potentially reshaping asset allocation. Bitcoin is flashing bearish signals, with a major sell-off warning on the horizon. We also dove into Ethereum's ambitious roadmap to potentially surpass Bitcoin, driven by institutional adoption and network upgrades. Finally, we examined the risks of a Red September for Bitcoin, highlighted by whale activity and market vulnerabilities. Don't miss out on these vital updates. Make sure you're subscribed, hit that notification bell, smash that like button, and follow us on all social platforms to stay ahead of the curve. We'll see you in the next one.